from our perspective, we do want to help people understand the value of blockchain technology, the value of programmability, how we can actually grow the pie together.
So hello everybody, and welcome to this very special collaboration between the Founders Speak Unplugged and Couchonomics with Arjun. I'm back again at the Singapore FinTech Festival. We're recording live from Hall 4. Like last year, I'm hosting a group of, entrepreneurs, founders, executives who are leading the FinTech revolution, if I may use that term, and bringing it to us across the world. Joining me as my first guest, and the person who's going to help me start the journey today, is Wee Kee Toh. Wee Kee is the global head of business architecture for coin systems at Onyx. A bit of a mouthful, Wee Kee. But having said that, welcome to the show.
Thank you, Arjun.
All right. Let's just start, because our audience is entirely global, right? I think it would really help people understand what is Onyx, right? Or what is Onyx platform? It's part of JPMorgan, right? Tell us a little bit about what is Onyx, what is it out there to achieve, what problems are you guys solving?
So Onyx is a unit within JPMorgan that focuses very much on the use of blockchain. So I'm within the payments of Onyx itself. So what I'm focusing on is really a lot about using blockchain for payments. So today we transact in, on average, about $2 billion in value every day. So our clients actually use it for transactions, very much usually for treasury management, payments within the group across major locations in like Singapore, London, New York. So that's usually how our clients are using it.
And you launched the platform in which part of the world?
Onyx is global in nature.
Right.
So I wouldn't kind of say like where it was launched first, but the major locations are really Singapore, London, and New York.
Before we get a bit more into Onyx and specifically the Onyx coin and so on and so forth, you have a very interesting background, right? Before you joined Onyx, you were actually at the Monetary Authority of Singapore. Talk to me a little bit about your background. I think it'll be quite interesting, and I'll allow us to go a little wider in our conversation from what I was reading about you.
Thank you. So I started in the MAS about 2016, so have been focusing on central bank digital currencies. I used to lead the project Ubin that looks at wholesale CBDC, the use of wholesale CBDCs. Subsequently, I was at the Bank for International Settlement Innovation Hub in Singapore, looking at Project Damba that looks at multi-CBDCs. So broadly, I mean, it's really a mouthful of acronyms, but broadly, it's really looking at how we can use central bank digital currencies to just make payments faster, cheaper, and safer, and using it for a variety of use cases. So very much around like not just for payments, but what are some of the additional capabilities that we can bring to the market because of the use of like digital currencies, some of the new capabilities that we are able to bring into money and into payments itself.
Okay, so let's talk a little bit, if you don't mind, about CBDCs. I have you, so I'm going to use the opportunity and ask you a few questions. So, number of wholesale CBDC projects are on. BIS is taking a leading edge on a number of these initiatives, right? There are a number of these consortia which have been formed in the part of the world where I live, which is the Middle East. We hear about Mbridge a lot, and so on and so forth, right? We also hear a lot about retail CBDCs, right? But retail CBDCs, in my humble opinion, seems like, the world's kind of polarized, right? Some people feel that there is clear uses for it, right? And it can be applied. But there is a group of people who's actually quite vocal, which says retail CBDCs is an answer looking for a problem, right? What's your perspective on both wholesale and retail? But let's start with retail CBDCs first.
So my view about retail CBDC is really, what problem is it trying to solve? Now, if you look at countries where there's already a very developed functioning retail payment system, so Singapore, for example, faster payments, PayNow, for example, it's so easy to pay each other already. So the gap is really not significant. So within a country like Singapore, you probably say why do we need another payment rail? Why do we need retail CBDCs? But if you start looking at some of the other countries, this is really an opportunity to leapfrog some of the existing systems that we have today. So if a country is going to spend another $20-30 million developing a new retail payment systems, why not build it on the latest technology that's available today? And I see that's really how some of the central banks are approaching retail CBDC, really looking at, can I build a better system because this is a better technology that's available today?
That's an interesting way to look at it. And if I look at wholesale CBDCs, your perspective is?
Well, I think wholesale CBDC is actually a little different then, because one of the big benefits of digital currencies is really around programmability. So the idea that you can kind of build certain set of logic into making payments itself. Now, when you are looking at the retail level, clients like retail customers, they are not going to build a lot of this logic. And even then, it's actually costly from a processing perspective to run these programmable instructions. So from a retail perspective, you are not going to get a lot of usage of programmability. But on a wholesale level, programmability actually enables some of this new capability to take place. And I can explain a bit more from the context of what we are doing within Onyx subsequently. And that probably gives a better flavor to the benefits of programmability. So that's one part of it, really programmability capabilities. I think that's one of the big selling points for digital currencies. The other big selling point is really in terms of multi-CBDCs or multi-currencies. So if you think of a conventional payment system, you usually have a single operator, a single owner running the full stack of the system. But once you start looking at multiple currencies, so multi-CBDCs, for example, you're going to have Singapore dollars that's issued by the MAS. You could have, say, Malaysian ringgit by Central Bank of Negara, for example. So these are actually all currencies issued by different central banks. Mm-hmm. Now, if they were to come together and say, hey, we actually want our currencies to circulate on a common platform, then the question is, who is the right party to actually own and operate such a platform? That's really where we see the value of blockchain technology, because we are actually able to have that governance problem solved on a technology level. So essentially, the ability for parties to trust that within this network itself, we are able to securely issue our CBDCs, issue it in a way that no one else is able to change anything to do with it. So that solves that governance challenge, and that's where I see a lot of value in like multilateral platforms, multi-CBDC platforms.
No, I agree with you. And I think the little I know about it and the more I've been reading about it, I think the governance problem that blockchain actually solves is arguably the biggest gain, right? Beyond just the use cases that you can actually bring to life. Because to be honest with you, in this whole multipolar world, this geopolitical world, and Ravi Menon mentioned it in his speech earlier today morning, I think if technology can solve for some of these issues, right, and which allows countries to trade freely, to move their monies more freely, it does work. Wee Kee, before we go a bit more into Onyx, I'm going to still keep you at sort of the industry level, right? Let's take a step back, right? I think it would be incredibly beneficial to, I guess, the audience, including myself, right? From your perspective, how are you seeing the world of digital assets, the world of distributed ledger technology evolve, right? What are the sort of interesting trends that we are seeing, which you believe will capture the imagination of both institutions and retails and government, and will sort of start shaping, I guess, the future of fintech or the future of financial services?
So one of the big trends that I'm seeing, at least in the last few days of the Elevandi Insights Forum, Singapore FinTech Festival, there's been a lot more discussions from an interoperability perspective. Now, we have always talked about interoperability because it's such a nice topic to talk about. But when we first started talking about interoperability, that was like probably when blockchain first started. That was one of the first things that everyone talked about. But it was really a lot of talk, because at that point in time, there were no live use cases. And without live use cases, it's very difficult to talk about interoperability. It becomes just this very high level, very fluffy idea.
Very
around
motherhood and apple pie.
Yes, exactly. So, but what we are seeing this time round, this year, is that we are talking about real interoperability in terms of how we are going to connect our platforms. And the main difference is because platforms are going live, we have live use cases. What we are doing is, a great example, we do average of $2 billion transactions a day. We do have other platforms out there doing digital securities, digital assets. Ultimately, we need to look at how we can connect across these different platforms. So one of the projects that we went live with recently, announced a couple of weeks back, was really around DVP settlement, where we have our product called synchronized settlement. So what we do is allow for DVP settlement even when assets and currencies are on different platforms. So this is a concrete example of connectivity. I wouldn't even say that we are at the stage of interoperability, because we do need multi-stages to eventually get there, but we are now actually really visiting this idea that platforms need to talk to each other, because we have assets, we have currencies on different platforms. We need a much better ability for all of them to work together.
Okay, so interoperability or connectivity, which will lead to interoperability,
Yes.
is one trend. Are there any other interesting trends which you believe will shape the near future of digital assets?
I think the other trend really was what I was just mentioning around platforms going live and really scaling.
Okay.
Yeah.
And you think that these platforms will go live largely because they'll be backed by large banks, or you're going to see a lot of new fintechs who are going to come out with these platforms? Or are you going to see governments play a role and go in, will these platforms become public infrastructure plays, or do you see all of the above?
I would say that at least for the first step, I do see a lot of live projects being driven by large banks. Part of it is really just like there's a high activation barrier in a way. There is a barrier to building such platforms and going live with customers, and that it requires significant resources, investments into doing so.
And trust.
Yes.
Which to be honest with you large banks have, to an extent.
Yes.
Right. So let's talk a little bit about JPM Coin, right? That's what it's called.
Yeah.
Correct. And I think you're very deeply involved in it, right? Tell us, what is JPM Coin? What are the use cases? What impact is it already having or it expects to have?
So JPM Coin is really a blockchain-based payment systems. Today, it's actually deployed within JPMorgan environment. We use it to provide our clients with the ability to transact across borders in real time around the clock. So that's really the primary usage of how our clients are using it. But we are also providing additional capabilities like programmability, allowing clients to actually deploy their logic into our environment such that they are processed, within the environment at a much quicker pace and with much more certainty.
What you've just defined to me in terms of what JPM Coin does happened in the past too, right? That was a primary activity that the bank offered, right? But by switching to JPM Coin, if I'm an institutional customer of yours, what is the benefit that I have beyond speed and transparency, right? Because you can argue that speed and transparency could have been achieved even in the traditional, technology. And how do you as a bank benefit from moving from, if I may say, old world architecture to new solutions such as JPM Coin?
One of the best examples is really around programmability. It's a capability that was previously not viable to provide.
So bring programmability to life. For the audience, what does programmability mean in the context here?
Programmability itself is not a new concept, because if you think about it, I mean, clients, they can always build logic within their own systems.
Sure.
They run TMS system, treasury management system, or ERP systems.
Yep.
Those in itself is programmability in a sense, because you build certain logics, but they reside within the client side. So actually, when we talk about programmability, we are very specific to what we mean by bank-side programmability. The idea that programmable instructions, or essentially code and logic that usually resides within the client system, you are able to bring them in a self-contained form and deploy them into the bank's environment. So a good example is a very simple use case. I'll use a very simple use case to explain.
Yeah.
One of the usual treasury management techniques is what we call zero balancing. So you have target balancing. So you have a specific balance that you want to arrive at the end of the day, for example, or at all times of the day. So how it usually works is that from the client side, they will pull certain data from the bank. What are my account balances? They do some form of projection. How much payments am I going to make throughout the course of the day? And then they decide, okay, around 5 p.m., for example, I need to move certain amount of funds from the different accounts so that at 6 p.m. at the close of a day, I reach my target balance. So this is usually how clients will have done it from a client-side programmability. Now with bank-side programmability, the logic is deployed within the bank. So it can be something as simple as if balance is above a certain amount, move funds from this account to another account. So the beauty of this is that this logic is deployed within the bank system. It runs based on what the bank knows at any point in time. So with a client system, you don't have an immediate view of balances. You are always polling the bank system to get what is that balance at the point in time. But when the logic is within the bank system, we know exactly what the balances are and we are able to act on the balance. So at any time when there's changes in terms of balances because of a credit to the account, a debit to the account, for example, you are making out a payment or you have received certain funds, those instructions can be triggered and then move accordingly. So I use a very simple example over here just to kind of give a sense of...
That's very helpful.
Yes. But I do want to add that the beauty of programmability is that you can layer on the logic. So while I use a very simple example, you could potentially be creating much more complex logic that could build on each other. For example, I could even be looking at the FX rates and then saying that, hey, actually, I don't have sufficient US dollars, but the FX rate is favorable. I'm going to exchange my pounds for US dollars and then credit to the account instead.
When we started the conversation, you mentioned about, new platforms are coming on live, which is a trend by itself because a lot of the talk is now turning into reality. You also talked about the concept of interoperability, or connections. So obviously this is an ecosystem play, right? Which then requires, in my humble opinion, lots of collaboration, lots of partnerships, right? So from your lens, which is looking at architecture, right? How do you see, what are the interesting collaborations that you see emerging, either at an industry level or at a JPMorgan level or at an Onyx level? What are the interesting partnerships which are being established to sort of make this into more of an ecosystem play?
What we are expecting to see in the financial ecosystem is really a much more integrated financial ecosystem. We have also seen that the value of what we are doing, a lot of it is from a network effects perspective. So ultimately, it's around bringing together a much broader set of applications with a much broader set of users. We need to drive adoption, and that is not something that can be easily done by any single player. So the future vision, or what we are seeing actually, even that's happening even today, is that banks are starting to look to collaborate with each other on a much tighter level. So an example of that is really global layer one. The idea that, on a common blockchain network, banks can deploy their applications and these applications are able to interact with each other. So the simplest example is always in terms of DVP settlement, delivery of securities and payments being made in an atomic manner. So from our perspective, we are looking at payments. We could potentially be working with another bank that is doing security settlement, for example. We could have different smart contracts that's deployed on a common platform. This smart contract is able to interact and do DVP settlement directly. Now, this is really only the start. We are talking about only connectivity or composability of two smart contracts. But potentially, you could have a much longer chain of transactions that are all economically linked to each other. So one example is, for example, I'm trying to buy a securities that's denominated in US dollars. I don't have US dollars, I only have euros. Can I then exchange my euros for US dollars and then subsequently swap that US dollars for the securities? So essentially 3 legs of a transaction being done in an atomic manner that I don't even have to worry about desynchronization. I don't have to worry about the rates moving, and because of that, maybe I accidentally bought too much US dollars or insufficient US dollars. So I think that's where the world is heading towards.
No, I love it. So in one answer we had atomic, we had interoperability, we had instant settlements, we had pretty much all the words. So and you had global layer one. I'm going to ask you. So global layer one was very interesting. Over the last couple of days, I attended a couple of sessions. I think I also read up on Project Guardian.
Yes.
Guardian is also one way that layer one is being sort of brought to life. tell us a little bit about what is global layer one at a conceptual state, at a conceptual level.
So if you look at a public blockchain as an example today, like on public Ethereum, anyone is able to deploy their smart contracts. So some of the best examples are really in terms of like stable coins and automated market making mechanisms, because you could have stable coins that are issued by different parties. You could have AMM mechanisms that are issued by another party altogether, and all of them are able to interact seamlessly with each other. Now, from a bank's perspective, we find that very useful and interesting. We want to do something like that, but today we still find it very difficult to use public blockchains because of governance reason. So global layer one is our answer to that, where we are looking at a large group of banks coming together to essentially operate our own open and accessible blockchain network. I wouldn't go to the extent of calling it public, but I would say that it's meant to be a much more open and accessible network that is built by financial institutions for financial institutions. So it's intended to work in a very similar way to public blockchains, public Ethereums, where all the banks have the ability to be onboarded, deploy applications, and these applications are able to work with each other.
That leads me to my next question, which is everything to do with regulation, right? And everything to do with navigating regulation. Now, I would imagine you are best placed to give me an answer because you were with a regulator. Now you're with a global giant of a bank like JPMorgan, right? Tell me, how are the regulators looking at this, right? And what are some of the challenges and opportunities that are being, that are opening up for financial institutions to sort of work? And I think the reason I ask this question is because the part of the world that I live in, right, we have been still a little, if I may say, slower in terms of adopting some of these technologies, right? Specifically in the spaces that you're speaking. My humble view is, I think the quickest way to unlock is for the banking world to work with the regulator. I call it sandbox environments, call them trial environments, pilot environments, to actually build that knowledge together so that you're actually regulating based on use cases, on actually the tire hitting the road, rather than, as you said, fluffy, intellectual conversations. So tell us, how do you see the regulatory environment shift, and how does that impact Onyx? Because you actually want to build a platform where you want to bring other banks onto it, right? You want other banks to use the platform either from a connectivity perspective, but also use your platform itself. So, sorry, convoluted question. Where do you see regulation heading? Where do you see the challenges emerging?
I have heard a lot of sometimes comments from general public that talks about regulations are difficult. It's very difficult to work in some of these environments because regulations are unclear. Now, my personal view, and like you say, coming from a regulator perspective, I have a very biased view, which is that regulators are sensible people. They are not there to make life difficult for everyone. They are there to manage risk. They are there to make sure that banks know what they are doing. So in some cases, it is really a learning journey where we work very much with the regulators to help them understand what we are doing and get them comfortable with what we are doing. And a big part of that is really making sure that we don't try to go out in a big bang approach. What I mean by that is, while we have this vision of, when I talk about GR1, for example, we have this vision of much more integrated financial ecosystem. The idea of us deploying applications on some external blockchain networks that could interact with all the different platforms, different applications. Now, once you start thinking from that level, it is very scary if you're starting from nothing. So in fact, what we have always been doing is let's do it in a stepwise approach. Let's get the regulators comfortable with one part of what we are doing, and after that, let's try to push the boundary a bit more and then get them comfortable to the next level. So an example is really how we first started. When we first launched JPMorgan Coin, it's built on blockchain technology. It's something new for the regulators, but we deploy it within our environment. So from that perspective, regulators are comfortable because it's subject to the same kind of technology risk assessment that all our products and services goes through. The business itself, the business definition, the legal definition, they remain the same. They're comfortable with it. We were able to go live with JPMorgan Coin. So that was really the first step. Now, the next step is when we started to bring them on. What is blockchain technology? Why is it useful? like I was sharing earlier, is most useful when it's used as a multilateral platform. But multilateral platform now suddenly, it creates some form of like this idea of decentralization. And decentralization is something that feels very scary because of governance reasons. So the next step that we brought them through is telling them that, hey, we've invested in Patio. Patio is a new joint venture that is going to have nodes that are hosted only by banks. So while we are now looking at a partially decentralized networks, all the nodes are hosted by known entity. Governance is built around very strong rule books, very strong governance mechanisms. Again, they are comfortable. We were able to go live with Patio. So it's always a stepwise kind of manner. Because
tell us a little bit about Patio.
Patio is a multi-currency settlement platform.
Okay.
We are one of the early investors together with DBS Bank, Temasek, and Standard Chartered. So on Patio itself, how we actually do it is have different currencies essentially distributed by different settlement banks. So for example, JPMorgan is a settlement bank for US dollar.
Yep.
DBS Bank is a settlement bank for Sing dollars. So within Patio, we're actually able to essentially record these digital currencies, have Patio as the source of truth for who is actually owning all of these different currencies. So within Patio, participant banks are able to transact in US dollar, in Sing dollar. They're able to transact directly with each other and in a much more seamless manner.
We have a couple of minutes left, so I'm going to end with an open-ended question, right? Which is your future outlook in terms of how do you see the widening impact of distributed ledger technology, players like Onyx, on sort of the wider financial ecosystem, right? Where do you see this heading for yourself, both as an organization and then as an industry?
From our perspective, what we are focusing a lot on is really scaling, is really around bringing much more customers on board and looking at having our clients transact more on the platform itself. Because ultimately, we are a commercial business. It's really about proving that there is value to what we are doing. We are getting good tractions, we are getting a lot of customers on board, and we are getting a lot more transactions. Now, a large part of that is also around providing clients with capabilities that are unique to what we are able to do. What is very difficult to achieve with much more traditional or conventional systems. So a big part of that is around programmability. We are building more capabilities into the programmability itself. We are making it a lot easier for clients to build much more complex logic and deploy them within our system. So that's very much from an Onyx perspective. Now, from an industry level, I do see a lot more focus on collaboration, a lot more focus at how we can actually grow the pie together. So like I was mentioning, we will focus very much on payments. We could be working with other banks that is looking at security settlement. GR1 is really the best example because within GR1 itself, the idea is that we are going to make it a lot easier for clients to be onboarded onto GR1. So the idea that if you are connected once to the platform, you gain technical access to all the different applications. So the way that we have done it today, it's really not the best use of technology, blockchain technology, because very much what we are seeing today, banks, you have one use case as one applications on one platform. Now, if there's 100 of banks who's doing it in such a way, you have 100 different platforms. So first, from a resource perspective, that's not very efficient, because we could really be just using one platform instead of 100. Second, it's not very efficient from a connectivity perspective, because if these 100 applications were to interact with the rest of them, you're going to need about 5,000 pairs of connection just to do that. Yeah. So that's really just not a sensible way of doing it. So what we are really working towards now is just maximizing the value of blockchain technology, bring applications onto a common platform. That's where we see efficiency benefits from a platform perspective, from a connectivity perspective, and from an adoption perspective.
Wee Kee, last question. I should have said the last question was last question. For people like me and others who want to learn and educate themselves more on what is actually happening in this world, right? What should we be doing? What resources should we be tapping up?
Well, since I'm at the Singapore FinTech Festival, I do have to, give a shout out to them.
You must.
Yes, please come by to, Singapore FinTech Festival. There's a lot of happenings. great sessions, great speakers, and in fact, just walking around, talking to people on all the different booths. Even for myself, I've been learning a lot, just talking to people, interacting with them, really understanding what they are looking at. And of course, the other perspective is really just look at some of the resources that banks are putting out. For example, for ourselves, we actually published a report on programmability a couple of weeks back. It was a collaboration with the MIT Digital Currency Initiative. Because from our perspective, we do want to help people understand the value of blockchain technology, the value of programmability. So we are trying to push out some of these knowledge articles to really just be very clear about where the value is and how we can benefit from the use of blockchain technology.
Wee Kee, I want to thank you. Right, this was an intense 30 minutes. It'll need maybe 30 months for me to get up to whatever you shared with me, but hopefully I'll have a faster way to learn about this world, which is shifting so quickly. That was one of the observations I had over the last 2 days, is that we're actually seeing an entire paradigm shift in the way, the financial services is going to be constructed in the future. Whether all of it comes to life or some of it comes to life, I think it's going to be a lot different than what it was 5 or 10 years ago, right? But the underlying principle of banking still stays the same. The underlying exchange, underlying concept of moving money will still stay reign. So I'd like to thank you. Enjoy the rest of the festival. I know we're on day 1. Actually, we are in hour 2 of the festival. So you got 2.5 days of fun. And please stay in touch. And if you ever find yourself in the Middle East, do give me a call. I'd love to actually grab a bite or a cup of coffee and hear more about what you guys are doing. I've been trying to get hold of Naveen, and I'll say this on the show last few times, but our paths have been they've crossed each other, but we haven't had some time together. But thank you for coming.
Thank you so much.
So, ladies and gentlemen, that was Wee Kee Toh, who's the global head of business architecture for the coin systems for Onyx, which is a JPMorgan, if I may say, business. He was my first guest, kicking off this collaboration between the Founders Peak Unplugged and Couchonomics with Arjun. With that, I'll say goodbye till our next episode. Bye-bye.